Okay. Now,
And after
ABC
the
company.
recording is done, sir, you will send me in WhatsApp, or it will be in the app only, Zoom app, or will it be in the upgrade app?
No, last class, did I send you?
Yes, sir, through WhatsApp.
Through it's YouTube, right? I converted into YouTube recording and I sent you, right?
YouTube recording, sir.
You didn't receive,
No, sir. Like you mean through YouTube you sent, or is it
YouTube
through?
link I've sent. YouTube link I've sent you.
Okay, okay. Yes, sir. I'll see.
Yeah. So both the videos I have done. Last class, whatever I covered now.
Yes, sir.
So I've just converted into YouTube video and I have sent you. Okay.
Okay, sir.
You just see. And today also I'll be sending you the link. I'll
Okay, sir.
convert it into YouTube and YouTube video and I'll be sending you. Okay.
Yes, sir.
Fine. So now ABC company was incorporated on 30th September 2017 to take over the business of Mohan from 1st April 2017. So now this is nothing but business purchase date is April 17 and company incorporation is 30th September 2017. So the first thing we need to do is you just do the ratio now. What is the pre-incorporation date and what is the post-incorporation date? First, do that. Okay. So can you tell me
Yes,
orally
sir.
now?
Yes, sir. First of all, incorporation date is on 30th September 2017. And 1st April 2017 is the pre-incorporation.
Yes. Pre-incorporation starts from
1st April 2017.
Yeah. To
30th, I mean not 30th, I mean 30th before September, sir. I mean April, March, April, May, June, July, August, sir. 30th August 2017.
see the date. It is not, the company was registered not on September 1st. It was registered on September 30th.
It was incorporated on 30th, no, sir, September.
Yes.
So we are not taking that incorporation data. So we are not taking the month, no, sir.
No, you
September
should take September month also. See, now you are calculating the pre-incorporation time, right?
Yes.
So pre-incorporation means what? Before the registration of the company. How many days, how many months you can calculate? You can calculate that. So now the business is purchased on 1st April. So you count April also. May will be there. May you count. May, June will be there. You count June. July will be there. You count July. August will be there. You count August. Now, September, the entire 30 days, the registration was not done on 1st September or 2nd September. It was done on last of the September, correct?
Yes, sir.
So that month also you should include in the pre-incorporation only.
Okay.
Did you get that? Because the business was incorporated on the last day of the month. So that month is also there in the pre-incorporation.
Okay, sir.
Okay. So it is how many months?
It is April, May, June, July, August, September. 6 months, sir.
Yes, exactly. Now we'll go for post-incorporation.
Yes, sir.
What will be the
31st, 2000. The year ended 31st, 2018, sir. 31st March 2018.
When it is starting?
It is starting. The business was taken over on 1st 2017, incorporated on 30th September 2017, and now the year ended, sir. The financial accounts of business are all closed on the year end of 31st March 2018, sir. I think 16 is a printing mistake.
Yes, 16 is a printing mistake there. But now, can you tell me the pre-incorporation months and post-incorporation months? Pre-incorporation,
Yes,
whatever you told was correct. So I'll just
yes,
write it on the screen now. See, whatever you told, pre-incorporation period is equal to. So when was the business purchased?
The business was purchased on 1st April 2017, sir.
April 1st to, correct, 30th
Yes, sir.
September.
Yes, sir.
So that will be 6 months.
Yes,
Am
sir.
I correct? Yes.
Yes, sir.
Now go for the post incorporation period.
Post incorporation was on 1st April 2017, sir.
Hmm.
And I mean, it was on 31st March 2018. So we are going to take 30th September. We are including 30th September. So
No, no,
September.
no, wait.
I mean, we're not
See,
taking because it is after
yes.
incorporation. We're
After
not taking.
incorporation. Yes,
After
exactly.
incorporation, we are not taking, sir. So we are not taking September. We are doing October, November, December, January,
Yes.
February, March. That's another 6. So 6 by 6, sir, which will be 1 by 1 if we simplify.
31st March. So that will be another 6 months.
Yes, sir.
Now you calculate all the ratios before starting the problem. Okay. Now calculate all the ratios that is required. First is calculate the time ratio. Okay.
Yes, sir. Yes, sir.
Now time ratio is equal to pre-incorporation is to post-incorporation period. So whatever
Divided
you
by
told,
post, sir.
yes. No,
Divided by post.
pre-incorporation is to
Yes, sir. Multiplied by.
post-incorporation period. Not multiply, just ratio. Do the ratio. That's all.
Okay, it's okay.
Okay. So now that
Okay.
will be pre-incorporation period is to post-incorporation is to 6 is to 6. So as you told, it will be 1 is to 1.
Yes,
This
sir.
is the time ratio. Okay. You got it?
Yes, sir.
Okay. Now, another the next set of ratios we'll see. The next set of ratios is sales ratio. The second
Yes.
ratio that you require is sales ratio. Now, see the information given in the problem regarding sales. What they have given you. So they have given you, if this is the question, see, and see, they have only given the pre-incorporation sales and post-incorporation sales. See, April to September,
Yes, sir.
October to March, correct?
Yes, sir.
1,20,000 is to 1,80,000. So they have only given the sales of pre-incorporation period and post-incorporation period. So just what you need to do is just copy that amount. Okay.
Okay, sir.
So that will be, what is the pre-incorporation sales now? 1 lakh?
Green. I don't know, sir.
You're not seeing the problem.
1,20,000
Yes, I'll go
by
back.
1,80,000.
Okay.
Yes, sir.
Okay. Now, 1,20,000, 1,80,000. Okay.
Yes, sir. Yes, sir.
I'll go back. Okay. So now 1,80,000, 1,20,000, 1,80,000. If you simplify that, 2 6 are 12,
Yes, sir.
2 9s are 18.
18.
Again, 2 3s are further.
Two
If
threes
you can,
and 9.
3s are 6. Sorry, 3 2s are 6 and 3 3s are, sorry, 3 2
12.
are 2 is to 3.
12. 2 is 3.
2 is
Okay.
3. Okay. Okay. Is it clear?
Yes, sir. Yes, sir.
Okay. Now both the ratios. Any doubts in these two ratios now that we calculated, time ratio and sales ratio?
Sir, sales ratio, can you just show me one more time?
Yes. I'll go back to the problem. Just see. See, in the problem itself, they have given you. See, this is regarding the date of pre-incorporation and post-incorporation. Now, this is the information that they have given you.
Yes, sir.
See, sales they have given directly. Sales of pre-incorporation is 1,20,000. Sales of post-incorporation is 1,80,000.
Yes, sir.
Next, purchases also they have given April that is pre-incorporation. October is post-incorporation. Can you see this? April to September is which month? Pre-incorporation.
Incorporation.
October is which month? Post-incorporation.
Incorporation.
So that is as simple as that. Okay.
Yes, sir.
Okay. And they have given you gross profit directly. Gross profit they have given directly. And
Yes, sir.
this is one important information you need to understand. Suppose if they don't give gross profit, if they don't give gross profit, you need to calculate the gross profit. I will tell you
Yes,
how,
sir.
and I will also give you the formula. You can note it down.
Yes, sir.
Now in this problem, gross profit is given directly. So don't scratch any, no need to scratch our head, correct? Gross
Yes,
profit
sir.
is given directly. Suppose gross profit is not given. How do you calculate this gross profit? It is called as sales minus cost of goods sold. So when you are applying this formula, only when gross profit is not given. Okay.
Okay, sir. Yes, sir.
Okay, done. Gross profit is equal to sales minus cost of goods sold. So this is
Yes,
the
sir.
gross profit. Now, in this problem, gross profit is given, forget about it. Suppose if gross profit is not given, what you do is take this cost of goods sold. How do you get this cost of goods sold? Is nothing but cost of goods sold is always, first what you need to do is take opening stock, add purchases. Okay, first take opening stock, the next one add purchases minus closing stock gives you cost of goods sold. This is the formula.
Okay, sir.
See, I will repeat all the procedure. First, in this problem, gross profit is given directly, so no need to worry about that. Suppose sometimes gross profit will be missed out in the problem. If gross profit is missed out in the problem, how do you calculate gross profit? You will take, first you will take, this is the formula, gross profit is equal to sales minus cost of goods sold. So now sales will be given in the problem. Cost of goods sold is nothing but first take the opening stock. Okay, next take the purchases, next deduct the closing stock, you will get the cost of goods sold. So sales minus cost of goods sold is equal to gross profit.
Yes,
The
sir.
entire process. Okay.
Yes, sir.
Okay, but as I told, in this problem, gross profit itself, gross profit directly they have given. You can see
Yes, sir.
this, correct?
Yes,
Gross
sir.
profit is given. Now let us see. Let me hear from you. See, now sales pre-incorporation and post-incorporation, we have already done it. So don't worry. Gross profit, which ratio we have to take?
We have to take gross profit. We have to take post, sir. Post incorporation. It's profit after
No,
we made the business. So
no. Gross profit, I've given you in the format. Gross profit should be taken on the sales.
okay.
Gross profit should be taken in the sales ratio.
Sales.
Okay.
Yes, sir.
Okay. Next, I'll come to all the expenses now. Now, what is the first expenses? Salaries. Okay.
Salary.
Tell me, salaries should be taken in which ratio?
Is it pre-incorporation, sir?
No. Just see the expense. It is salary. Salary.
Yes, sir. So okay, it's time ratio.
Yes, salary is given on time ratio. So don't get confused here. See, the ratio is always, see, you see the expenses, you will come to know. See, this is salary. Salary is always given monthly, daily. So like that. So when it is on the time, take it on time ratio.
Salary.
Okay.
Okay. Time
Salary
ratio.
should be
Salary
taken on
in
time
time
ratio.
ratio.
Next, selling expenses. So the name
Selling
itself is
expense.
you. Selling expenses is related to,
It's really selling expenses is related to cost, sir.
no. Just see the expense here. What is that? Selling.
Okay, selling. So it is regular times again time ratio, sir.
No.
I mean sales
I'll
ratio, sales ratio because it's sales.
yes. You should be, you just go through the format once. It will make you very simple. It will make it very simple.
Yes, sir.
Selling ratio, see, any expenses you find it near to the sales, take it on sales ratio. Any expenses related to time, take it on time ratio. Okay.
Okay, sir.
Next, see, there will be some expenses like it will be difficult. Depreciation. So once again, depreciation is always taken on the time. Depreciation is always taken on the time. So it is always, depreciation is done yearly. So it is done every year. So which ratio?
It is depreciation, sir. It is.
Yeah.
So what should we do? Any ratio, sir?
No. I told you, depreciation is always calculated 1 year. Depreciation is calculated only for a year. Every year, depreciation will be calculated.
So it's sales ratio.
No. See, I'm telling it should be taken on a time. See, just remember.
Yes, sir. Because the
any
depreciation is on time, sir. As the years go by, the value of the goods reduces. So like it's
yes,
time.
correct. So it is
So,
time ratio, right?
yes, okay. No, sir,
So
because time ratio, all the things that are very regular, meaning anything that always per month, per day, it keeps going on. I thought it was like that, sir.
no. When anything is related to time, when you calculate any expenses based on a time factor, this is for a month, this is for only for a year, when it is measured in the terms of time.
Yes, sir. I understood.
Okay. Then director's remuneration.
Director's remuneration is directly taken to this thing, sir.
Post.
Post, yes.
Post. Correct. Next, debenture interest.
Debenture interest, sales, sir.
No, debenture interest is also taken on
Directly
post.
taken to post.
Directly taken to post. The next one is administration expenses. Administration expenses is once again related to office. No, not time. Administration expenses. See, sorry. Yeah. Administration expenses, office and administration expenses is related to time factor. Every month it will
Yes,
may occur every month, every week. So it is related to time. So take it on 1:1 ratio, time ratio.
yes.
So that's all. That's all the expenses are. Now you
So
will oppose.
we have to just calculate according to it, sir. Should we calculate it according to the ratios and show the amount?
Yes. Now I'm doing it. See. So now what you need to do is prepare an income statement. This is called as an income statement now. I'll
Yes,
just
sir.
draw the format. You can just copy it down.
Yes, sir.
This is called as income statement for the year ending 31st March. Okay, it is probably 2018, I guess. 2017, so 2018. 2018. Okay. Now, what is the format is? You need to, I'll just draw a column here. Okay, now this is the format. First, you have to write particulars. Okay. The next one will be ratio. The next one will be whether it belongs to pre-incorporation
and post.
Yeah. Pre incorporation. The next one is post incorporation. Okay, so this is the format now.
Yes.
Okay, so what the income statement means, always it starts from gross profit. Okay, so I told you very clearly, gross profit gross profit, if it is given directly, no issue. If it is not given, you need to calculate using the formula. What is that formula? Sales minus
Sales
cost
minus
of
cost of goods sold.
if cost of goods sold you don't know, purchases, take the purchases, take the opening stock, just to minus the closing stock, you will get the cost of goods sold.
Yes.
Okay. Okay, now as I told you earlier, gross profit, will go back to the problem now.
Yes.
So now, so what is the gross profit you can see in the problem now?
The gross profit I see.
Yeah.
Gross profit 1,05,000.
Yes. So now just apportion this 1,05,000 into pre-incorporation and post-incorporation.
Yes, sir. So gross
Okay,
profit,
so it
gross
is,
profit is time ratio. So we are
yes,
doing it
ratio you
according to
just
ratio.
write it. Ratio you just write it. You
6
write
to
the
6,
time
1 by 1.
ratio. Okay.
1:1, no, sir?
Yes, 1:1. So you can write that
So,
ratio also.
so
No,
we can just divide them equally.
sorry. 1 second. I told you gross profit should be taken on which ratio?
Sales ratio.
Yes, sales ratio, not time ratio. It is sales ratio. Because uh, profit will happen only on the sales, right?
Yes, sir.
So it should be taken on sales.
Okay.
So what is the sales ratio we have calculated?
The sales ratio. Sales
Have you
ratio
made a
also
note of
is,
it?
even sales ratio is 1:1, no, sir, if I'm not wrong.
No. See, I have shown it here. Please see. Time ratio is 1:1. Sales ratio is
2:3.
pre-incorporation sales. They have only given you 1,20,000 is the pre-incorporation sales. Post-incorporation sales is 1,80,000. So 1,20,000 is to 1,80,000 will be.
So 6 by 9, sir. 6 by 9.
No, I have written the sales ratio. See this? The ratio of sales.
Yes, sir. So I
What
should
is that?
just so I have to just now calculate, sir.
Yes. Now tell me what is the sales ratio now? It is.
So the sales ratio was 6 by 9 and we simplified it to 2 by 3.
Yes, 2:3. Now you
Yes,
just simplify that. 1,05,000 is the gross profit into 2 by 3 means 2:3 means 2 belongs to pre-incorporation, 3 belongs to post-incorporation. Correct?
Yes, sir. Yes, sir.
So 2 by 5 and 1,05,000
3, 4, 5, 5. So
into
42,000, sir.
40.
2,000. First one is 42,000, sir. 2:5.
Correct. 42,000. Next, what is the post-incorporation?
Post incorporation 63,000.
Okay, correct. Now ratio you understood, it is 2:3. Which ratio we have
Yes, sir.
taken?
Sales
Sales.
ratio.
I'll mention this for your reference. Okay.
Yes, sir.
Okay. Now the same total. See, you need to write the total here. After gross profit, you just write the total.
Yes, sir.
Now, what will be the total? It will be the same thing. It is 42,000, and it is
63,000.
yes 63,000. Okay. Now this is the total. Now what you will do is, after once you get the total, you will just deduct all the expenses minus expenses.
And
Okay.
how do we know the expenses, sir?
It is given in the problem directly, na?
Okay, okay.
If I will go back to the problem now.
Yes, sir.
See, in this statement, they have given you gross profit. You took the gross profit and you apportioned into pre-incorporation and post-incorporation. Now,
Yes.
just remaining thing, you just apportion all the expenses in the ratio that we already discussed. Okay. Now let us
Yes, sir.
take one.
There is
Let us take one.
no debit credit here, no, sir. We are not putting anything on debit side, credit side, no, sir. We are just calculating the
Yeah.
ratios according.
Yes, this is not debit or credit, but actually this is because it is an income statement.
Yeah.
We are doing an income statement, right? So it is we are doing it vertically, not horizontally. So therefore, it won't appear here.
Okay.
Suppose any incomes are there, you should take it as a with the gross profit, or separately you take add incomes. You should do it like that. Okay.
Okay, sir.
Hmm. Okay. Now, incomes, if it is there, you just take like that. Now we'll see. Now we'll see the ratios. So remaining ratios will calculate now. Compute first one, which is the first expenses now after gross profit.
After gross profit, salaries, sir, very first.
Yes. See, don't take any purchases, any sales. Sales and purchases, we need to calculate sales and purchases only to calculate gross profit. So do not take once again that. Okay.
Okay, sir.
In the next problems, you will understand. Suppose purchases is given, suppose sales is given, and gross profit is not given. We use sales, purchases, sales, closing stock, opening stock to compute the gross profit. Here in the problem, no need to take sales and purchases. Why? Because gross profit we already know.
Yes, sir.
Now, so let us take one by one. First one is salaries. So I already discussed this. Salaries, which ratio I told?
Salaries, we are taking through time ratio.
Very good. So salaries. So I'll write down all the expenses now. I will highlight it in different color so that it becomes easy to understand. So now I've given it as red heading.
Yes, sir.
This is the expenses. Now, first expenses is what? Salaries.
Yes, sir.
The first expense will be salary. Now, salaries, you just take the total of the salaries. What is the salaries ratio? It is time ratio. You told time ratio is 1:1, correct?
Yes, sir.
So shall I make here? I will just write it for your reference. Time.
Okay, sir.
Okay. Time ratio. I'll just mention
Yes,
it
sir.
as time. Okay.
Yes, sir.
So 1:1. So now I will go back to the problem.
Yes, sir. So we can just divide it by
The
2,
amount
sir.
is how much is salaries?
15,000. So 15,000
15,000.
divided by
Yes, 1/2 and 1/2. So pre-incorporation is 1,
7,500.
post-corporation is also 1. So salaries is time ratio. So
7,500, 7,500, sir.
7,500
500.
and 7.
7,500 again.
Yes, correct. Next one, the next ratio will compute.
Yes, sir.
Yes, the next one you can see after salaries. We have done the salaries now. Now,
Yes, sir.
yes, what is the next expense?
Selling expenses, which is sales
Yes,
ratio.
yes, very good. So selling expenses, you will compute in the sales ratio. Now I'll go back and just allocate it. Selling expenses. Once again, selling expenses is based on sales.
Yes,
Okay.
sir.
So sales ratio is what?
It is 1,200, 1,200 for the first one, sir. 2 by
Okay.
3.
What is the
So
ratio?
1,200, sir. For
2:3.
pre-incorporation, 1,200.
1,200
Yes, sir.
and 1,000
Sir, I want to see the question, sir. I am
question you
calculating.
want.
Yes, sir.
Okay. Okay. Selling expenses is 3,000.
Okay.
So now 3,000 into
3 divided by 5. So we'll get 1,800, sir.
yes 2:3. So I hope you know how to calculate this selling
Yes, sir. I
expenses.
know to calculate ratios. I know to calculate ratios.
Okay. So 3,000 into 2/5, 3,000 into 3/5. Okay.
Yes, sir.
Okay. Next expenses will go. Next expenses after this we'll see. Yes. The next one is depreciation.
Depreciation is time, sir.
Yes, exactly. Depreciation is related to time. See, one or two problems, definitely we can solve more problems here. Why? Because the same expenses is going to repeat in the every problem. So you will be familiar with all the terms. So we can go at a faster rate.
Yes, sir. 750 and 750, sir.
Yes. One second. So the next ratio will be, what is the expenses I told? Depreciation. Huh?
Depreciation, sir. Time
Oh,
ratio 750, 750, sir, according to the calculation.
okay.
Sir, after
So
the
now,
class, like if you would give some questions similar to this question, we can
yes,
practice.
yes. I'll give it, but okay. The same thing, can you do a problem? But one thing will be missing, except gross profit, everything will be there. So can you find out that?
Yes, sir. But
Okay.
if there is no gross profit, I mean, we don't have to calculate anything, no, sir. By our own, everything
Yes.
will be given.
Yes. But if gross profit is not given, you need to calculate. Okay, we'll finish this
Okay.
and I'll let you know. Okay, depreciation once again. Depreciation is taken on the time basis.
Yes, sir. 750 and 750.
Yes. So time ratio is once again 1:1.
1 by 1.
So now, what was the amount? I forgot. Sorry,
Uh, it was this thing, sir. It was
1,500, right?
1500. 1500, sir.
Okay, so then it will be 750 and 750.
Yes.
Correct?
Yes, sir.
Yeah. Now after depreciation,
After depreciation,
director's remuneration.